The trade war is causing turmoil in the agriculture sector. Joe Cahill is columnist for Crain's Chicago Business. He's here to bring us up to date on a global company, ADM. Joe, what can you tell us about ADM and trade tensions?
Yeah, well, ADM is kind of an interesting situation. In the early stages of the trade tensions, they actually were able to capitalize on some of the shifts in the way various agricultural commodities moved around the world. Chinese is buying more from South America, for example, and they were able to capitalize on that by moving things, to different facilities that they operate around the world.
Are you seeing any signs of change?
As the situation has intensified, it's really started to bite them. They have had a couple of disappointing quarters, and their stock is way off this year. So it's becoming clear that they cannot dodge and weave their way around the impact of a huge trade fight between the world's two largest economies.
What else is happening with ADM and shareholders?
They had been optimistic that there would be a settlement of the trade dispute between China and the U.S. this summer. With each passing day, that starts to look less likely. So they're going to have to ride this out. They are trying to keep focused on their long-term strategy, but in the meantime, they're cutting costs. They've announced $1 billion worth of costs. They've shut down some plants. And this also coincides with terrible weather in the Midwest, where we've had all this flooding, and that has tied up a lot of their operations where they process various agricultural commodities.
Thank you, Joe. We look forward to having you back on our show very soon.
Good to be here.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.